introduce our host, Tian Wei.
Hello, I'm Tian Wei, and this is World Insight. China's Vice Premier Liu He said on Wednesday that the country will take measures to keep the economy on an even keel. Economic indicators and capital markets will be kept within a proper range. Liu made the remarks at the meeting of the Financial Stability and Development Committee under the State Council. China's shares recovered after more favorable policies were announced. The China Securities Index, or CSI 300, jumped more than 4%, while the Hang Seng Index surged roughly 8%. Currently, Chinese and U.S. regulation agencies are in contact to work on specific cooperation plans. That's according to media report. The vice premier stressed that the monetary policies should be used to support economic development, and more measures should be put in place to prevent risks in the property sector and also support overseas listing plans of domestic companies. Now, let's loop in our panelists. Welcome to the discussion. In Shanghai, Wang Dan, chief economist of Hang Seng Bank. In New York, Anthony Chen, former JP Morgan Chase chief economist. In Beijing, Xu Qiang, assistant director of the International Monetary Institute at Renmin University of China. Ladies and gentlemen, welcome to the program. Good news today. Big news today. Dan, tell me more about how you are assessing the latest rise in the stock market and how is it related to the sustainability of Chinese economy?
The stock market is quite encouraged by the potential monetary easing coming underway because this is not a regular meeting from the central government. And the market, especially the capital market, is expecting more clarification. And I'm glad that the meeting happened today in order to reverse some of the weak expectations.
Now, you look at the timing, since you talk about today. Very interesting. After China-U.S. High-level diplomats talk to one another, not long after China's two sessions, which the government report suggests about the GDP growth rate, and not long after the sell-off of China stocks in the U.S. market. Now, Professor Chu, tell me more about the timing.
Well, I think the timing is a key point. It's a very important juncture at the moment. Recently, we see the market as facing lots of pressure. I think the basic reason, one is because of the uncertainty posed by the Ukraine crisis and then the inflation and uprising commodity price coming after that. And the second thing is that the market is not sure about the future, especially when the accounting standard induced by the U.S. SEC, the SEC, to Chinese listed company in the U.S. and how U.S. and China in the future, in the larger picture, can cooperate with each other. So I think our foreign minister and the U.S. foreign minister or the chief of the foreign policies, Jake Sullivan, they meet together. So the whole thing has been showing a very clear sign that China and the U.S. still want to work with each other. So this gives the whole market a very important confidence.
Not only to the Chinese investors, but also international one. Mr. Chen, are these the words that investors want to hear? And what about for the future? Are words enough?
Well, these are the important words that I think investors all over the world want to hear. Just 2.5 years ago, I was a keynote speaker in Shenzhen IPO conference, and I said that there would be tough negotiations ahead with Chinese and U.S. regulators regarding all the disclosure to protect Chinese sovereignty. But at the end, I thought and said that there would be compromise. And these words are, in fact, suggesting that both the U.S. and the Chinese regulators are moving towards a compromise. Now, words, of course, are just words, but certainly are encouraging. And if these words are followed by actions, global investors and Chinese investors will be very happy with the outcome.
I want to dig more about the timing because this is right before the SEC meeting about the interest rates and, of course, the Fed meeting about the interest rates. And this is very crucial a few hours from now, Dan.
Well, the timing is crucial, and the market, in fact, had expected monetary easing yesterday, and it didn't happen. And that sort of discouraged a lot of the global investors. So today, it is quite important that before the Fed meeting, there has to be some clarification and a central message from China, and that's exactly what we see.
It seems that there has been some kinds of harmony, at least in the timing that we are witnessing today. But what about the sectors? Go to you, Anthony. If you look at the specific areas that the Vice Premier talked about, the high-tech companies, internet companies particularly, and also the property market, and how do you see this is likely to stabilize people's expectation and help China to help others to be more optimistic about China's economy?
Well, we know that those were the sectors that were hit very hard, the property sector, the technology sector. And to hear words that the investigations and the regulatory questions that China has about the technology sector are coming to an end and they're getting wrapped up is all encouraging news. And that's why you see companies like Alibaba making such a huge comeback because it really tells us that even though people or investors felt there was a storm, they feel that the storm is ending and that there is hope for the future. And so if these words become the new reality, I think that the markets, both in China and the U.S., will certainly benefit from that.
But how will that work, Mr. Chu? These encouraging words with the realities of the world economy, China included, of course. High inflation, we see that around the world, particularly with the recent Ukraine-Russia crisis, and of course, with the earlier US dollar issue, the printing of the money is still continuing.
Well, as far as I can see, this soothing words from the government is really important. It's not empty talk. A lot of people are paying attention to the monetary policies issued by the Central Bank of China or the Fed. But the central bankers, as far as I know, they're not caring that too much because everybody right now, the central bankers understand this is not the key. As we have already known, the Chinese central bankers has already halted their easing policies with MLF. That is because the real impact comes from the geopolitics, the Ukraine conflicts, and induced the whole inflation pressure and the volatilities in the commodity price, and also the confrontations in the management of the commercials between China and America, especially in the regard of the high-tech companies. So the government, if they can actually tell people they can work with each other, they can calm down the situation.
Right.
That is the whole things the market will actually need, the certainty from the government.
Well, or China said it is continuing to welcome the investors and also overseas investment. That's said by the Chinese Premier during his annual press conference, at the government work report, and now by the Vice Premier who's in charge of financial sector once and again. Dan, do you think those words will be heard well? Meanwhile, what about words from Washington? Are we hearing, or New York, are we hearing much in parallel from the other side?
Well, I'm afraid the end result will be more dependent on what the U.S. decide to do. Now there are better communications between regulators on both sides, better communications between politicians as well. But from China's side, there's only so much we can do. From the U.S., it wants to mitigate between China and Russia, and also want to see if they would like to have more Chinese companies listed in the U.S. And now the global investors are quite spooked. To reverse that kind of confidence, it will take a lot of effort from China, from the inside, and also what the U.S. is going to do on their side.
Anthony.
Well, I think that this presents a great opportunity. I think that the United States is certainly looking to work more closely with China if they get some assurances that the strength of the friendship between China and Russia is certainly somewhat flexible, and that it allows an opportunity for engagement with the United States. So I think that if China reaches out to the United States would be very, very excited about forging a much stronger relationship with China, because they certainly want to offset the possibility that the friendship between China and Russia will get too strong.
Well, of course, Anthony has always been this very optimistic person. Only a little bit cloudy from time to time, Anthony, I have to say that. But Chang, what is your judgment about the same question?
Well, as far as I know, I've heard several details or news or trivia from the second track of the diplomats. They're not professional diplomats, but they talk to each other in a very efficient way. I think in the American side, I think they also have the willingness to work with China. Because China and America, they don't have strategic conflicts for now. And also, they both want the whole global market to be calmed down. And also, they're both victims of the high rising commodity price. And both countries really need to cool the whole atmosphere in the global right now. It copes with everybody's benefit. And we have been seeing many, many signs. But for the U.S., they sometimes act up a little bit. They want to show, I'm still tough about my standing ground, but I really want to work with you. So we really need to read between the lines.
Then one crucial thing, of course, is recently talked about the news about the accounting standards. That has a huge impact on Chinese companies being listed in the U.S. market or overseas market. Do you see this could be a small breath of relief for those Chinese companies who are having their shares overseas as well?
It might provide some kind of relief, but in the long term, I still think Chinese companies will have a more challenging time if they want to get listed in the U.S. because they are now sort of sandwiched between China and the U.S. The U.S. is under the name of national security, and China would want to see more data transparency. Then for companies to comply with both standards, it's just going to become more and more difficult. And other investors overseas see this. They will think for a second time when they think about where they should put their, where they should park their money.
Tony, we only have 40 seconds left, possibly. You see increasing enthusiasm these days about renminbi-based asset alternative to Wall Street. How do you see the trend of that? What does that mean? Very briefly.
The RMB, I think it will stay quite strong
I think
because the
that
trade
the
surplus.
Can we have Anthony, please? Thank you.
Yeah, go ahead.
Yes, I think that the trend is going to be towards diversification. The global economy understands that there are risks to put all your eggs in one basket, say to speak, such as the U.S. dollar. So I think that there will be some diversification moving forward, and diversification is not a problem for me. I think that it lowers risk, and I look forward to it.
Dan, 10 seconds, if you want.
Oh, well, I think RMB will stay strong since the trade surplus will still stay high, and global investors will see Chinese assets as relatively safe assets in this uncertainty.
Dan Wang, Anthony Chen, Chi Chang, thank you so much for being with us. All the best. Really appreciate it.